Trading Terminology, Part 4. Broker. A broker is a registered individual or firm that acts as an intermediary between a trader or investor and the stock exchange. They provide the platforms and services that allow you to buy and sell stocks, derivatives, commodities, and other securities. A broker typically ensures compliance with regulatory norms, for example, through SEBI in India or the SEC in the United States, executes buy and sell orders on behalf of clients, provides trading platforms, web and mobile apps, offers market data, research tools, and sometimes advisory services, maintains your demat and trading account. Rally. A rally refers to a sustained and strong upward movement in the price of a stock index or the overall market over a short or extended period. It signals renewed buying interest, optimism, or recovery, either after a decline or during an ongoing bullish trend. Decline. A decline in the stock market refers to a sustained downward movement in the price of a stock, index, or the broader market. It can be short-term or long-term, ranging from a mild pullback to a full-blown downtrend or bear market. Market crash. A market crash is a sudden, sharp, and widespread drop in stock prices, typically across major indices or sectors, occurring within a very short period, often in a single day or a few consecutive days. It usually reflects panic selling and intense fear, often triggered by unexpected bad news or events. Common causes of market crashes: economic shocks like recession fears, credit crunch, geopolitical crises or global conflicts, pandemics or natural disasters like the COVID-19 crash in 2020. Historical examples: 2008 global financial crisis, 2020 COVID-19 market crash. Stock or share. A stock or share represents ownership in a company. When you buy a share, you are essentially buying a small piece of that business. For example, if you own 100 shares of a company that has 1 million total shares, you own 0.01% of that company. How investors benefit from owning stocks. Capital appreciation. If the stock price increases over time, your investment grows in value. Dividends. Some companies share their profits with shareholders through periodic payments. Why companies issue shares. Companies issue shares to raise capital for business expansion, product development, hiring, other operational needs. In return, investors become shareholders and can benefit if the company performs well. Trading account. A trading account is a digital platform that allows you to buy and sell financial securities like stocks, ETFs, commodities, or derivatives on the stock market. It acts as your gateway to the market. Without a trading account, you cannot place orders on the exchange. When you open a trading account with a registered stockbroker, you get access to live market data, tools to place buy-sell orders, real-time tracking of your trades, order types like market orders, limit orders, stop-loss orders, and more.